This is Craig Haugard with your Financial Issues Ag Update. Well, corn had another light volume trade day yesterday. The market seems to be languishing without a clear sense of direction. It's now been over 2 months since the last flash sale of U.S. corn to China. The U.S. has 450 million bushels sold to China this marketing year, but the market has been trading something closer to 800 million. Now, many traders still believe that we're going to see China step back into this market, but until that happens, they seem to be reluctant to push out of the current trading range. Adverse weather for much of southern Brazil's growing season has analysts reducing their estimate of the first corn crop by 2 million metric tons, but they're leaving the size of the second corn crop unchanged for now. It may be production problems in South America that provides the next spark to the corn market. Soybeans were driven higher yesterday by great domestic demand. The monthly NOPA crush report for November came in at 181 million bushels. That's an all-time crush record for the month of November. The South American crops are not out of the woods weather-wise yet either. We have drier weather for Argentina next week, while Brazil's weather looks to be improving. There were some rumors yesterday that some soybean meal business may be getting switched from the Argentina back to the United States, and that was supportive to bean prices as well. Wheat was firmer as traders tried to determine the impact of the Russian wheat export tax, which is going to be implemented from February 15th through June 30th. Egypt tendered for some wheat, and Ukraine and Romania got that business at a price that was $7 per metric ton higher than what Egypt paid in their last tender. Cotton prices continued to push higher yesterday. At the close, we had March futures up 92 points, settling at 75.95. Livestock futures turned in a mixed session. We had February live cattle ending the day 22.5 cents lower, while feeder cattle, March feeders, were up 30 cents at the closing bell. Lean hog futures were stronger as well, with the February futures 77.5 cents higher for the day. Class 3 milk futures were lower in the spot month, with the more deferred months higher. At the close, we had December futures down 5 points, settling at 15.79. While January futures were 22 points higher as they closed out the session at 16.32. And meat cutout values were all lower. We had choice box beef 87 cents lower, closing at 208.82. Select boxes were down a dime, settling at 192.20. Pork carcass cutout values had a pretty rough day. They were down $2.89 to finish the session at $74.14 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.